So my recording software just crashed, I think, from lack of resources or something. So I'm going to do this again. Silver. We started, yeah. So not great in silver, obviously. I was saying how there's nothing like this decline here in terms of its smoothness, its uninterruptedness throughout the whole of this last near 2-year range now. But it pales in comparison to losses in crypto. It pales in comparison to losses, maybe not in percentage terms, but in the kind of losses you'd have actually taken using leverage in stocks, bonds, you name it. The only thing going up has been the dollar. Everything else has been getting tanked. So it's not been the end of the world. Especially, I only really got enthusiastic trying to buy down here. But, this... I remember this getting excited here, thinking this would be the return up, and because it went down more. So I've been semi-wrecked, but nothing in comparison to what might have been or what others are experiencing in other asset classes. So, and the good thing about silver is, we're never going back unless it's the literal end of the world. We're never going back to $5 silver. We're probably never going back to $10 silver. Probably. In all likelihood, we're going to stay above 15, between 15 and 20. I wouldn't expect us to go below 15. We may not even really go below 20. And then, of course, every dollar point below 20 is its own major support. 19 is a big support. 18. So every individual dollar mark, every round dollar mark would be, and when it's not going to go down to 5, it's not going to go down to 10. The kind of risk you're putting yourself under, the kind of losses you can possibly take, even using leverage, diminish and become, less likely. The lower it goes, the longer you can get, basically. The longer and longer. But the monthly's not looking great. Weekly. Well, there it is. We took out all the lows going back 2 years. Nearly. We're in May, so look where we were in May of 2 years ago. We were at $15. 2 years later, we're at 21. We moved $6 in 2 years. That's $3 a year, guys. For the last 2 years, silver has now moved $3 per year to the upside. That's... talk about slow and steady. We could come down lower. But we're also at reasonably significant supports. We've retraced to the 50% of the whole move after these crazy lows back here. That was only 2 years ago. Only 2 years ago, silver, You kidding me? $11 silver? Anyway, so we've retraced half of that. We've got this trending, diagonally upward sloping rails for it to catch on. No divergences on our weekly indicators. Of course, it's very thin. Price action is very thin. So we filled down to here. Price action remains very thin, down to 1841.8. This is all very thin. Thin. We've not tested this wick top here at just under 20. What's that? 1960, 1965. We could come down there possibly. But we've had a 30% decline from the $30 high. We've had a 23, 24, 25% decline since the $26 high in April. And you get on the daily, and the RSI has not been this oversold since, well, it was. I've been moving this level down. I've been, this level. We are now the most oversold in this entire 2-year range. And we've not been this oversold since these lows here, going back to March of 2020 and the spike low of September 2020. And we've got a building sort of positive divergence on the composite index. On the 6 hour, you can see we've put in this descending channel, stable price action, coming into key levels, big retracement levels, positive divergences, and we've had a spike just to annoy everyone who got in precisely at the level. So that's usually the pattern of price action you see that precedes further upside. And I think we should come up to 23, 24 before we see we could get a retest these lows. We could get the retest down into 18, 19 after that, possibly. Or we may just go from here. Maybe here's far enough. Maybe this is deep enough. Maybe 2 years or thereabouts is long enough for us to now move out of this range and into a new range between I don't know, 32 and 50 or something like that. So I'm long from somewhere down here in silver because I saw it hit the big 50 here. And I saw, and then I got in at the big 50. I got stopped out because my stops were too tight because I was terrified by this move down. So I was using stops that were too tight, and then I had to get back in again at less good levels. I can't remember exactly where, it was somewhere in here. So that's the story on silver. Stocks. Oh, while we're here, silver's looking abysmal. Where are we? Against stocks. Although it's higher than it was, the ratio is maintaining higher than the start of the year. Bonds have been shatting out, but silver has managed to fall against it. Well done, silver. So it's abysmal. Silver against gold, abysmal. And silver against commodities, unbelievably abysmal. Almost impossibly abysmal. New lows. New lows even at 2 years out. Astonishingly negative, to the point where maybe it's so bad it's good. Maybe it's a reason to be bullish. Anyway, back to stocks. So, where was the Nasdaq? Yeah, so in my error, focusing on silver, I've been calling stock short since back here because we kept touching this 100% long-term fib channel line, and then we've been bouncing between them, and it's been magical. And guess where we just bounced from? Yeah, another one. But have I been shorting? No, because I've been trying to buy silver, so I've missed out on this entire kill me now 28% decline in indices that I could. I wouldn't quite be handing in my notes at my job, but even thinking that, ooh, that stings. That stings having to think that thought, because it is true. It is a true and honest and real thought about. It is genuinely what would have happened had I followed my bias on stocks, and gone half. Even had kept going half long silver, half short stocks, then it would still be so much better. You shouldn't go. Well, I say you shouldn't go all in. Well, clearly I'm learning you shouldn't go all in on things. Perhaps that's the lesson I've learned. On one asset, I mean, eggs in one basket, not all in, but eggs in one basket. Oh boy, there was the second opportunity to get really short here. This was the most recent one. There was some sort of bullish Fed announcement here. They shut it right out, they flushed it right away. So we've bounced the 61.8. We could have a significant retracement. We could stop here. We're halfway. We could shop around for a bit. We could retest the 70.7 here. But then, the next level to look down for is 10,450 or thereabouts. But we've had the bounce. We've had a bounce. You can see sort of slowing momentum to the downside, even momentum to the downside, but a bit of a slowdown. Trend-o-matic is short. Huge update in Naiad, but Naiad does funny things sometimes and isn't incredibly reliable. Naiad is more reliable. We're at new lows. We've had a little bounce. Rhino, we're at these lows. We probably need to rise out of them a little bit. NEHL, big test towards the zero line, but staying under it. Stocks over the 50. Bit of a bounce. Yes, bonds, bit of a bounce. Negative. Weird. We're still negative overall. You're looking to sell. You're looking for sell opportunities, but the question is, where will they come? They could come immediately. We've retraced into this triangle, into this cluster. We've tested it. Maybe we could dump out from here, or maybe we sort of, slowly chug our way higher in a very frustrating and choppy way, and then dump out again at some point in the future. Whatever you like. Here's the hourly. Double top, bit of a negative divergence, but this was the real end of the session. It was the tail end of the session on the Friday, so who knows what that means. You could take this area here, and then here's our next big fib up here. It's amazing even on the hourly how much of a mess price action is and how it shoots and juts around. I mean, you look at the RSI and indicators on the daily, it's a much sort of smoother, winding its way around without so many sudden leaps and things, but you've got these sudden jumps. It's sharp and it's jagged and it's hard to really make sense of much of anything. And this is on the hourly chart, this isn't some wacky time frame, but we've got wacky RSI action. You've got to really zoom out, or again do something like go to the 4 hour, and even then, look at this. These candles here just make such a mess of everything. The divergences are clearer and stronger on higher time frames. That's the NAS. Let's have a look at the specs. Yeah, here was a sort of a neckline. Maybe we come up and test it. I don't know. We don't need that level anymore. We don't need that level. We probably don't need any of these. This was my key pivot level here. You can see what happened. We bounced off it. We came under. This was a resistance here. Test. Dump. Boing. We're going off these VWAPs as well. We took out. Oh, not quite. Not quite. We didn't quite come down to this wick low. Anyway, we've bounced. And again, you can see. Nope, it didn't draw. Some positive divergence coming in on the daily. So the question is, where from here? Here's your channel. We fell out of our channel. It's not good to fall out your channel. Maybe I'll put a new one in. Yeah, like that. See if it fits anywhere. Does it fit? Does it fit? Not convinced. Well, that's catching a nice few wicks. So let's say it does. Let's say it does fit. Let's say that fits there. Good enough. Yeah, let's get rid of that. Let's zoom in. Yeah. Ugly business. Is it worth going down time frames? Similar to the NAS. But the dollar, y'all, is surging to highs it's not been at since 2003. It's not been this high since 2003. 19-year highs in the dollar. And we've managed. Well, the month isn't done yet, but we've sort of poked above this wick high here. The question is, how much higher can it go? Or is it done? See, I thought we were going to get like a double top here, but then it never happened. Right, can be blown away. It can go. It can go. So we've accelerated out of the upwards channel. The question is, and the question is only, is this a false breakout? Is this parabolic momentum too much, too fast, too unstable? And there's literally no more buyers, only sellers now. That's the question. More pronounced divergences on the daily time frame. Where goeth the dollar? Who knows? Uranium puts in a good bounce here at this level. Positive divergence on the composite index. Great level to be getting long. I said here was a great level to get long a couple of weeks ago. You got this bouncing, and then the next level you might want to get long would be in here. We've got no bounce, and we've actually just tested the underside of that again. But you did, if you were getting long under these wicks, under this area here, then that was a good place to go long. Yeah, this looks like it should be a great place to go along, but look, there's nothing happened. We fell all the way through it, and we sort of came slightly back inside it. We got a delayed. It was going under these lows. Going under these lows. This actual, it's a block. It's a whatever it was, demand block. It did nothing on this occasion. Let's look at the big picture. It doesn't look great. You'd want to see it get back over 2140. The area that's being tested is basically the area between this pivot high and this retracement level. Can it find buyers in this level? Can it reverse? Can an area of resistance become an area of support? 1 says yes, 2 says yes, 3 says maybe. So we'll wait and see. There's the 4 hour. I'm laying off the booze. I keep staying up late to see the futures open. See what's going to happen to my positions, how destroyed I'll be, or whatever. Whether the market will finally turn around in silver. And, it's ruining my sleep. Let's see what else we've got. Gold. Well, gold has fell back into the sort of congestion area, going back 2 years, that runs through and formed this triangle. So we fell back into here, but I mean, gold's a little bit scary on the more zoomed out view, because it's not that long ago that gold was $250, $300 an ounce. Well, that was 20 years ago. Yeah, and I remember 20 years ago. This is when the UK sold its gold, I remember. And, this move from 250 to 1880, there was never much of a retracement into it. I mean, do we not need to at least come into something, maybe here, maybe 670. A real deep retracement on a yearly line. Yeah. And again, look at these divergences. That doesn't look good. That's an ugly candle on the monthly. Weekly. Does the daily provide any salvation? So from the highs, we've retraced. Yeah, 13%. I mean, that's a decent pullback. But from such high levels, and it could do more. It's not looking great, in my opinion. That's the worry as well regarding silver, because if gold looks this bad, then silver surely can't, do the complete opposite of gold and go up like a rocket. If gold looks like shit. Bonds, yeah, well, we've had a bounce again. We had a little bounce around in this double channel area here. Then we fell below it. We've bounced back into it, and we've wicked. The wick has been eaten up by sellers. But we've still got the up close on the week. On this bond ETF, which is also very good. Just about a double bottom on the composite index. And we've lost, how much have we lost in this move from the highs? Bonds have fallen so far. 18%, 18%. Where now? Where now for bonds? Still looks bad, I think. Still looks bad. And of course on the daily, where we have what matters is the Trendomatic. It's on red. Trendomatic is on red. What was interesting is you got your divergence here. The Trendomatic's on green. Yeah, but look, you're in these highs, you're diverging. And then, this goes negative. Momentum 1 goes negative. Momentum 2 goes negative. Trendomatic goes negative. Yeah. Let's have a look at Bitcoin. I've been calling Bitcoin short for a long time as well. I don't trade it. It's just another part of the agony of being me. Seeing these things happen, saying they're going to happen, and then not benefiting in any way, shape, or form. Never mind. So we've run all these lows here, going back 1 year and a bit. So maybe that's a long time in Bitcoin. Maybe 1 year and a bit's a long time. It's all about this level now. It's all about 28,600. They lose this again. It's going to be horrendous. At least 20,000 next. Possibly 12,000, 13,000. Maybe we come back into this yellow zone here. This downward channel. that contain the key price action of these 3 points here, and then the breakout. Maybe we backtest all the way down here. Ooh, it's ugly, ugly, ugly. Alternative, we hold it, and it's the asset of the future. Crypto Bros arrives again, just buy, and we go to some more subs. Completely absurd value, some completely absurd figure. There's the daily. Doesn't look great. 4 hours. Ooh, left shoulder, head, right shoulder. That's what people have got to be hoping for, right? So step 1 is hold above 28,600. Step 2 is get and hold above 32,340. Trendomatic is red on the 4 hour, and obviously on the daily. Let's go down to the half hour. So you got your trend line breakout on positive divergences. You might have got spikes out here if you put your stop this low, but then you just have to get in again, and you can see the support cutting through here. This is a long-term support. So it's a weekly support. But look how on the half-hour time frame it's finding it over and over again, drawn to it like a magnet. Very short-term long potentially at these levels. I don't know. Anything else? Someone on Twitter was looking at this through the FAS 3 times bearish DTF. Where's its history? So look at that. It was at 2.7 million back in the day at the financial crash. We've sort of risk off, risk on. No, not really. Okay, risk on. No, okay, not really. Well, maybe a little. No. Oh, is it risk on? No. Risk on? No, nothing's happening. So I would. I don't know what the leverage, what the requirements are for getting long this in IG, the margin requirements and the minimum bet. But goodness me, look at just imagine if this thing, fuck the silver squeeze. What about the FAS squeeze? FAS, hold on to your FAS. We're at 2,750. By the time the shit show's over, we could be back at like 820,000, 2.9 million, 2.7 million, 1. Look at this. This range itself is from 800,000 to 5 million. God bless these log charts. This looks like a small move, but it's fucking titanic. So yeah, there's resistance. Ooh, there's a resistance. There's a support. So, yeah, there we go. I maybe I should be getting long. Look at this. But if it goes up, if it gaps up, I mean, if it can gap up from 492 to 3,960, what, you know, there's always the possibility it will gap down on you, and yeah, that would I'd be making repayments to IG for the rest of my life, and I'd probably have to adopt a child as my legal offspring if I don't have any of my own to continue paying them if this gap down on me. Good grief. But yeah, the potential is it goes to 1 million. I figure at 1 pence a point, that's a good bet. Natural gas. Oh, that's the 4 hour. Daily. This was a great retracement. Getting long under here was a fantastic idea. We've come into, you can see, we've come into this nonsense up here, this range. And we've already tested up here, so this is sort of a tighter test. I suppose you've got to say it's bullish, but maybe it's not. We are negative divergence. Well, we're still within channel. Flagging a little bit. I don't have a definitive take on natural gas. Crude, purely out of interest. Where was it? So where was last week? Tuesday, week before. We had a little bit more upside, then we dumped a little bit more upside. Yeah, I mean, ever since, you know, the insanity of the run up from $62, we've been in range since, well, depends where you want to start it. March or March. According to taste. Do lower term time frames reveal anything? They do. Games with key pivot on divergences. We're now coming up to local highs. Now's not the time to be buying. So yeah, that is it. That was it. Bye bye.